Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 7th of August 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at the overnight changes and price moves we need to be aware of. And a very quiet session yesterday. I don't think there's any disguising that fact. Few moves of note. The one that I will point out, and perhaps a contrarian move, is Australian dollar versus US dollar, the Aussie gaining by 0.12%. I'm slightly surprised to see that bounce, so we'll come to the reasons for that momentarily. In terms of dollar index, solidifying its position or cementing its position above 95 for the moment, trading at 95.33, actually just off the lows on the day, but staying above that key round number and really doing so unopposed as far as yesterday's session was concerned. Okay then, what's on the calendar? Events that may move the markets today. A relatively light calendar. We've already had some key data out overnight. However, we've had the interest rate decision and rate statement report from the Reserve Bank of Australia that came out at 4:30 GMT, and we'll look at that in a bit more detail momentarily. We've also had leading economic index data for June out of Japan. We'll look at some more Japanese data momentarily as well. To come at 6 AM GMT, we will have industrial production data out of Germany. That's data on a year-on-year basis for the month of June, and that'll be followed by trade balance data for the month of June as well out of Germany. Of course, factory orders data disappointed yesterday, so it'll be very interesting to see what the industrial production number is like. And of course, trade balance data, always interesting, particularly as the Americans are very upset, shall we say, about the big surpluses that Germany runs as a nation. Jumping forward to 1400, then we have IV Purchasing Managers Index data out of Canada for the month of July, and then at 1900 to round the day off, we'll have consumer credit change in the US for the month of June. Okay then, breaking news and comment that's caught my eye overnight. And first of all, the Reserve Bank of Australia has left interest rates unchanged at 1.5%. They haven't moved in Australia interest rates for some 2 years. And now some market indicators are suggesting that rates in Australia won't move until 2020 at the earliest. So a bit of stagnation there as far as the Australian economy is concerned. Meanwhile, Japanese household spending fell in June by 1.2%. However, wages grew by 2.8% in the month, the fastest growth seen in that metric for more than 20 years. You have to go back to 1997 to find wages growing at a quicker rate in Japan. That sounds like good news, doesn't it? Of course, what we have to consider is that the Japanese may revert to type and save any extra cash that they have. For years, of course, they were the world's biggest savers. Abe's government and the Bank of Japan would prefer them to be spending that money. So let's see if higher wages can improve household spending in the coming month. Meanwhile, Brazilian new vehicle sales rose by 7.7% in July, with all subsets growing on the month, and car sales grew by an impressive 17.7% in July. Potentially an exciting leading indicator. Does it signal a recovery in the Brazilian economy? Well, it may do, but what I think we'd like to see is consecutive months of growth rather than just one blip in the middle of the summer. So let's see what happens there again going forward. Okay then, food for thought, something to take away with you into the trading day and beyond. Well, why not think about this? In a note published yesterday, Credit Suisse strategists showed that they believe their indicators are signalling a pullback in oil prices is due. They highlighted a fall in unexpected production outages, oil's relationship to copper, and crude prices relative to their long-term averages to make their case. And the 4 charts here show the indicators that Credit Suisse were looking at. It's an interesting one. This, for myself, I'd expected oil prices to press on a little bit with Iranian-US tensions ratcheting up and some issues in Saudi Arabia, but see us take a more sort of measured view and a look at the indicators rather than the geopolitics. So have a look at the charts, have a think, and decide what you think. Right, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you are uncertain about the risks involved in trading on leverage or the suitability of leverage products for you, then please do contact your Pepperstone account representative, and please do take a moment to read this risk warning. Thank you for your time.